Ladies and gentlemen, may I have your attention, please?
Covering both sides of the big issues with the analysis you trust on News Radio 1040 WHO.
You know what, Jeff Angelo is the program. Our friends at Gas Buddy. You hear Patrick DeHaan frequently on this show, and now saying it looks like by April we'll have $4 gas, $4 a gallon gas again. Now, I know that there's a couple of factors in talking to Gas Buddy over the years that happen as the weather gets warmer. You got a switch over to a different blend, and then people begin driving more, so demand is up. I get it, but is there more than that involved here? Let's talk it over with a fourth-generation oil and gas professional, Jay Young, back on the Newsmaker line with me. Jay, welcome back to Iowa Radio. Good morning, my friend.
Hey, thank you. I appreciate you having me on again. How y'all doing?
Oh, I'm doing all right, Jay. But, you know, I've had these financial analysts on the show. We're always talking about the economy. And they have been warning me, Jay. They're like, gas prices are going to go back up again, back up again, back up again. And that's really going to have an impact on our economy. So what is going on, Jay? Is this normal factors influencing the upward swing? Or is there something else going on?
Yeah, well, good thought. And I tell you what, and it's all about supply and demand. You know, it's all about how much supply do we have, and are we going to overcome that demand? And you know, companies made the big five made over $200 billion last year in profits. I mean, it was outstanding how much money they made. And normally, and I'm a fourth generation, been around. You know, I'm 60 years old, and normally when this happens, you will see that companies will spend that money to go back and drill for oil and gas. They don't just put it in their pockets. They normally, what they would do is, until this time, they would go back to drilling for more oil, which would make more oil, which would make our supply go up and our demand stays the same. Then it would offset it and prices would come down. But this time they're not doing that. This time they're buying back their stock. They're sending out dividends to clients, or they're paying down their debts or their debt ratio. So they're being more conservative, and it's them being more conservative, or it's green people, you know, on their boards, or people that are stockholders and so forth. Not green, but you know what I'm saying, tree huggers and people that don't like to drill for oil and gas.
Right.
These people are trying to keep companies from drilling. Therefore, it's just we don't have the supply necessary to keep our prices down when the demand starts to increase in the spring break, or you know, comes the summertime when we really do use a lot of oil. We're just not going to have it.
So, Jay, I promise you that on the listener text line, I will get a few texts where they heard you say about the profits that the companies made last year, and they'll say, they're just gouging us, Jeff. Don't you understand? They're just gouging us. So how do you respond to that when a listener hears about the profits that the companies are making and going, well, this is just gouging, right?
Yeah, well, that has nothing to do with the price of oil and gas. I mean, it's a company like ours. I mean, we didn't do very good at all during the pandemic. I mean, man, when prices went way down, we lost a lot of money during the pandemic.
Sure.
And then when prices go up, we make money.
Yeah.
Okay. So, but it's not what we're doing. I mean, it's not that we're gouging. We don't set the price. I mean, it's not like us Texas guys, there's 4 or 5 of us, and we sit in some, you know, back room with a cigar and bourbon and say, well, what do you think we should make the prices today? And that has nothing at all to do with the price of oil and gas. It's all about supply and demand. Like sugar, soybeans, cocoa. I mean, it's all about supply and demand. So if we don't have the supply, look at this. Prices stayed down during the fourth quarter last year before the election, and the only reason they were staying down during the election is because Joe Biden was sucking all the oil out of our strategic reserves and giving it to our economy. So it looked like we were producing more oil because he was taking it out of the strategic reserves. But it wasn't coming out of the ground. If he would not have taken that oil out, prices would have been extremely high in the fourth quarter last year. They would have been extremely high. That's what's going to happen in the second quarter, third quarter this year, when things get, you know, switched around, and all of a sudden it's like, whoa, wait a minute. We need 20 million barrels a day, and we're only making 12. Wow, there's a big difference there. We're going to have to go overseas to get more oil, and because of that, we're going to see prices. I don't. Somebody said a minute ago, "Do you see prices at $5, $6?" I could see those.
Mm-hmm.
I could see it. I mean, in my book, The Upside of Oil and Gas Investing, I write about it. I tell about my family. It's time for people to look at oil and gas as an investment. I mean, go buy a $2 stock if you could. I mean, our projects here, it's 100% write-off and tax-free income and so forth. But if you can't do that, go to the stock market and buy a $2 stock, buy $100 worth. Open up an account, buy $50 worth, $100, and just keep adding to it because the price of oil is going to go up. And when it does, you don't want to be sitting here a year from now going, now who was that guy on the radio that said he looked like he could sing the song Elvira? I don't know if you remember the song Elvira.
Oak Ridge Boys, you bet.
There you go. What was he saying about? What was he saying about oil and gas prices? And now they're at $6, and that stock that I could have bought for $2 is at $4. Just remember that next year because it's going to go up. There's nothing keeping it down, and it's so sensitive. And it's so sensitive right now, and it's staying at 75, $80 a barrel. But a few little glitches here or there. Well, look at the Ukraine. I mean,
yeah,
Ukraine last year. I think we're celebrating a year when Russia came into Ukraine last year, and oil shot up to $125 a barrel.
Yep,
overnight. That's what can happen.
He is a
downside in this. I can see more upside than I can downside.
He's a fourth-generation oil and gas professional. That is Jay Young, not sitting around a room determining what your gas prices are. Jay, thanks very much for talking with me.